Hi, everybody. Chantal DeYoe here. We've been talking about the chart of accounts and the reports that are built off of it. My business is Chantal's Bookkeeping, and I'm happy to try to help you gain just a really generalized understanding of these pieces of financial information. Last video, we talked about the profit and loss statement, and we talked about the different parts of the chart of accounts that go in there. But now we want to talk about the second most common report, which is called the balance sheet. Now, that one's kind of like, what's that mean? Balance sheet. I don't know what the history of that particular phrase is, but it means basically the other parts of the chart of accounts. On this income or profit and loss statement, we talked about what you earn and what you spend. Well, what's left? What we own and what we owe. And also for businesses, what we've invested in our company. So we're talking about assets, liabilities, and equity on the balance sheet. And you can see it up here at the top. We've got the assets, all the different things, and then they total them up. All right, until we get down to this line. And then we've got the liabilities and equity. It comes together in this section. So you'll see the liabilities are first, and we get a total. And then we get the equity. All right. And then we get the total liabilities and equity. Now I'm going to collapse these just so that you can see the really high level information here. All right. And notice what happens over here. Assets always equal liabilities and equity. I'm not going to bother explaining all that right now to you, but that's just how it works with the balance sheet. When things used to be done in ledgers on paper, whether it was with calculators or even the means before that, or simply adding things up manually, on paper and in your head, it was altogether possible for things not to match up the way they needed to between the assets and liabilities. When you're in a software such as this, it virtually does not happen because the books they don't let you create a transaction that will unbalance this. Now, there might be somebody out there who proves me wrong and says, oh no, it is possible in the books to screw this up. I have never seen it. I'm not going to be dogmatic about it, but that's one of the beauties of the software is it doesn't let you make transactions that are going to break the reporting that needs to happen for your business or your personal finances. So between the profit and loss, which gives us what we earn and what we spend, and the balance sheet, which talks about what we own and what we owe and what we've invested in our business, everything from the chart of accounts is represented in these two reports. And you can see then how having all this information in two separate reports means that we've got information in two separate places. And there's another report that we're going to talk about in the next video that kind of brings those two things together. And it's a lesser known report. But if you ever can wrap your head around it and start playing around with it and using it, it'll help in ways that you might not have expected. So we'll talk about that in another video. Thank you very much and have a great day.